What's going on, good people? It's your boy Ash Assets. We're back again with another video, and today we're breaking down the core principles for profit. That's right, man. We're going to show you how to power your portfolios and put them in position for profits, man, because that's what we want. This is a game of return. So without further ado, we're going to get straight into it today. Now, the first principle we need to understand is fundamentally keeping a long-term mindset. Forget the short term. Don't get caught up in the now. Don't get caught up in trying to get rich quick, because the shortest route is usually the longest route, okay? And if you take shortcuts, you'll get cut short. So we need to understand this is a marathon. This isn't a sprint. Investing in the stock market is a marathon. All it cares about, can we put our money in position for the long term? And in doing that, it will equip us to win over time, because the market is designed to stay up way more than it goes down. In fact, it actually goes up 76% of the time. So those are odds that you need to be putting your money on. It's super important that we keep that mindset of thinking long term and understanding that if we put our hard-earned money in position today, then over time, that money will double, quadruple, and bring back more money for us. And ultimately, our freedom goal that we want to get to will be brought closer to our current realities, man. So look, next up, we need to understand when we're buying investments, we need to understand what we're actually buying, okay? You know, we need to not cling to the hype. We need to not cling to hope. We need to not cling to, the speculation, because that's ultimately just emotionally driven. We don't want to make investment choices on that, especially with our hard-earned money. And I'll be real, hope has never been a strategy. It never has. We need to eradicate that. So all hope does, it just hinders our potential every day. Okay, so we need to completely eradicate hope, hype, and speculation, and really understand what we actually want to invest in and what we want to own, because we will never get the returns that we want out of our money if we don't actually understand where we're putting it. So that's a great step, and that's why that's step number 2, because it's super important to really understand what it is that we're looking to own so we can actually print us returns over time. Next up, man, number 3, we need to be making sure that we invest in businesses with a competitive advantage, okay? Super important. Now, I like to call them moats. Now, think of it, back in history class, you would see castles, back in the day, empires were built with castles, and then what did they have around them? They all had a moat around them, which was an impenetrable advantage. It was a perimeter of water that would stop enemies coming in and infiltrating the castle. So investments are the same way. We need to make sure that our investments have moats around them, man. So to take it another step further, the beautiful game of football we all love and played back in the day as younguns, my defensive moat, my back four, if I had a choice to put them all on the same team, would be Puyol. I'll be having Sergio Ramos. I'll be having Cafu and Roberto Carlos, man. I'll be real. Argue with me in the comments if you want to, but look, that'd be my impenetrable advantage. So think of businesses in the same way. We need to make sure that we're not just investing in businesses that have generic products that everyone can replicate and bring into their business. We need stuff that is very hard barrier to entry, hard to replicate, and very expensive to replicate. So it basically becomes a hindrance if somebody tries to copy that business, that it will cost them too much money to keep operating. So think about businesses in that way and start being a bit more clever with your investment choices, man. So that's a key part of my success and why my portfolio has been really powering forward for the profits. It's because I've been making sure all my investments have undeniable competitive advantages, man. So look, next up, we need to make sure again that the businesses we want to own and have in our portfolios need to have consistent history. What do I mean by that? So consistent history of making money, consistent history of making profits. If they're paying dividends, have they been consistent with that? Has their revenue been consistent? Has their profits been consistent? This is all public available knowledge, and it's super important that we invest in businesses that are highly profitable for a long time, or at the very least, if they're not profitable, can they show us a forecasted plan year by year of how they're going to become profitable? That's very, very important, because we don't want to invest in businesses, again, on hope that they're going to make money, on hope that the products are going to be good, and hope that they're going to thrive and grow on the stock market. Because hope, remember, it's not a strategy, man. We need to be data focused, okay? So doing the research, making sure we find these metrics, and then we can start building our story. Then we can start adding the emotion into the data to create the execution, and that's where we can own these great assets, man. Next up, the next point we want to make sure is that the businesses that we want to own to truly create profits, they need to have great management. And statistically shown, companies perform much better when they are founder driven, meaning that the founders are still with the businesses and they're still the CEOs. You know, when we think about that, we think about Jeff Bezos. Okay, he's recently just left Amazon, but what was he? He was a founder. We've got Mark Zuckerberg. He's a founder of Facebook. We've got Reed Hastings. He's a founder of Netflix. So there's a pattern. This is why these businesses are thriving and they're growing and they're doing so great on the market. It's because they are founder driven. They've got skin in the game, man. They've got real money in the game. You know, we think about the most recent one, killing the game, which is Nvidia, destroying the market the past 2 years. Founder driven. So it's key that effective management plays a key role in these businesses. And to take it one step further, we need to understand that the businesses we want to own, they also need to be able to be great investors as well. Again, it's not a point that people think about. Yes, we want to invest in these businesses, but in order for them to make the returns for us and make the profits for us, they need to have effective money management. And the key term we use in the investment community is the ROIC, which stands for Return on Invested Capital. How much money can a business make deploying its own money out there? So for every $1 or every £1 the business puts out there, what's the return on that dollar? What's the return on that pound? The higher that number, the better the business, man. Again, this is a key metrics, and part of my secret sauce in building out a portfolio is understanding and having businesses in my portfolio that have a high ROIC, man. Don't sleep on that. It's super important and it's a little gem. Take that away with you and make sure you add that into your investing journey. So look, last one, and very, very important, because when it comes down to it, at the end of the day, this game is a game of returns. You know, that's what we want to do. We want to put our money in the machine and the machine multiply our money. So we need to be making sure that when we have all those metrics we went through covered, when we come to actually buying our stocks, we need to be buying at attractive prices, because what? Price is power. Price is what will determine the trajectory of our returns in our portfolio. So we can't just be buying assets at any given price. And that goes for anything. You know, you go buy a car, you haggle the price down. You know, you go buy a piece of jewelry, you buy a watch. There's always that barter. We want to get the best price possible in order for the return, when we come to selling it, be greater, because we get it at a lower entry price. So that's why it's super important that when we're buying our stocks, buying these assets, that we look for attractive prices, okay? And that's one of the main things we focus on in the assets only community, is buying at attractive prices, buying great companies to add to the portfolio, adding them to our watch list. But the most important thing, in order to execute, we have to plot the prices that we're looking to buy them at, man. So that's definitely part of building out our portfolios. And like I said, if you want to come join the community and get in on understanding how to buy these stocks and where to buy them, consider joining Assets Only, man. That's where every week we'll break down a great business and we add a price list to get in on, man. So look, today, that's what we're going to go through. We went through the core principles, my core principles for making my portfolio so profitable, and it can definitely help your portfolio grow over time, man. It's your boy Ash Assets. Don't forget to like, subscribe, drop a comment. Let me know if this helped you. Let me know how I can help you further, how I can improve. Please, please, please help the channel grow. It means an immense amount to help this community grow, because everyone needs this information. Everybody needs to get to their freedom goal and bring it closer to their realities, man. And everyone deserves that. Everyone is owed that, and it's everyone's right to have that, man. And the information can only do that for us, man. It's your boy Ash Assets. See you in the next one, man. Let's go.